The two smartest people that I've ever worked with closely are Mike Bloomberg and Travis Kalanick, bar none. I'm sitting in a Walmart meeting and a friend of mine called and said, hey, there's a guy with a small transportation startup. He's having some regulatory problems. Would you mind talking to him? I become Uber's first political advisor that day. I get really lucky when Travis calls back and says, listen, I can't afford your fee. Would you take equity? And thank God I said yes.
What is the biggest lesson you learned from working with Travis Kalanick?
I am an unapologetic Travis enthusiast. Did he make mistakes? Absolutely not. Travis fans will hear this and be angry about it. I don't care.
Bradley Tusk, welcome to Sourcery.
Hey, Molly, thanks for having me.
We have so much to talk about today.
I know. So just to tell the audience, we were chatting and then Molly looks at the producer. Tell me your name again. Lance, right? And said, we got that right. And he's like, no, you didn't tell me to press record. So we're going to have to do it all over again.
We're going to have to do it all over again. Let's talk about that. Let's talk about the Substack you're putting out right now.
Yeah. So what we were just talking about is I've got a Substack about to come out that says that I at least have a suspicion that all of this massive AI infrastructure investment, so it's 1.5 trillion in 2025, projected to be 2 trillion in 2026, is really about the short-term share price and valuation of the big AI companies, the generative companies, or the companies that supply CPUs, that's disguised as long-term thinking. So, investors like two things, and you know this better than I do at this point, but like A would be the fundamentals of a company itself, but B, oftentimes even more so, is the narrative, right? Tesla should not be worth a fraction of what it's worth today, if not for the narrative and the belief by investors that Elon, and he is a genius, but like that Elon will just figure things out that no one can predict, including Elon right now, and therefore the value is worth it, right? And then occasionally someone short stock, they look good for a little while, it goes the other way. But that's all narrative, right? I mean, Toyota should be an infinitely more valuable company than Tesla. And yet, I haven't checked the market cap in a while, but last I checked, it was like less than a quarter. So oftentimes, if you can sell investors on, hey, we're doing something really brilliant for the long-term future, people are like, great, here's my money. And they double down or they triple down. And in reality, it may be that the way that we think AI will happen in the next 10, 20 years is the way that it is today, right? So right now, what we assume is you need massive amounts of compute. So the chips from NVIDIA and everyone else are incredibly valuable. You need massive amounts of energy to power that compute. So all of the ancillary businesses are valuable. And therefore, you need to produce as much capacity as possible for the future. That might be true, but it might not be true, right? So for example, we know that when DeepSeek came out with their model, it was an inference model, right? That basically said, instead of having to sort of generate everything from scratch every time, we'll say that if A leads to B and B leads to C, we'll assume C is correct and just give you D. Now, is it as accurate? No. But is it possibly 90% as accurate? Yes. Now, it's a Chinese company, so for all we know, it's all bullshit, right? It might not be true at all. We don't know. But let's just take the off chance that they're not lying, right? And it's true. At least for the way that I use AI, 90% is more than good enough, right? I'm basically using it in lieu of Google these days. And so ultimately, if you said to me, this thing costs $10 and this thing costs $1, and the thing that costs $1 is 90% as good, I'm taking the thing that costs $1. If that's true, you probably didn't need the $2 trillion in infrastructure spending, which means these companies are going to be crippled by debt, right? It's fine to take out the debt and everyone to be excited while you're doing so and boost the share price. And by the way, if you are the executives of any of these companies, your net worth is the current share price and whatever you can sell, right? Not what it's going to be in 20 years. If anyone knows to get out, it's probably you. So I do worry a little bit that a lot of the investment that's happening is really about driving the narrative and therefore the valuation, if it's private, or the share price, if it's public today, as opposed to what the economy will actually need in a decade or two from now.
Can you break down where that capital is going within the $2 trillion?
Yeah. I mean, a lot of it are things like data centers. So a data center ultimately, like I don't invest in them because there's no real regulatory issue. We'll get into it. I mean, a little bit of permitting and zoning, but not that much. But I see deals, right? And occasionally I'll take a look at them. Some of it is physical capacity, servers, land. You can't really put a giant data center in the middle of Manhattan because it would cost 10 times as much, right?
Yeah.
So one is, where are you going to put it, right? So where Lance lives in New Jersey is a better location for a data center than where I live in Soho, right? That's one. Two would be actual chips from NVIDIA or whoever the maker might be, Intel, whoever it is, because you need very, very advanced GPUs, processing units, in order to be able to generate that level of AGI. And therefore, those are really, really expensive. And because the demand is so high, basic economics, if there's massive demand for GPUs, guess what costs more money? GPUs. And especially if there are trade restrictions around it, that further shapes the market, right? So that's and then energy, right? So it's interesting. I won't name him, but I was talking to a guy who might run for governor of Vermont the other day, and he was, basically, when you are a political donor like me, they pretend to ask you for sort of strategy and policy ideas before they ask you for the money.
Yeah.
And so we were doing that. And, given my background, I have a little bit to add on the campaign side, I guess. But and I was saying to him, because Vermont is a state that has great hydroelectric power, if I were you, I would really build a campaign platform around building data centers in Vermont, generate economic development, generate tax revenue, generate jobs. And the play is, hey, we can provide this energy for an incredibly low cost, and it's clean energy, which voters in Vermont care about, right? Some states that wouldn't matter, but it does there. And I said, I don't even know if it's absolutely right or not, but it's no more wrong than the narrative right now driving the market. And if investors are buying it with their money, my guess is it'll more than stand up to some political reporter taking a quick look at it. We'll see if he does it or not. We'll see if he runs or not. But nonetheless, energy is obviously a really big component. And in fact, if there's one larger societal externality that's positive around this, even if it turns out the money is a little bit of a waste, and stop me when this gets too wonky, but is we really do need to return to nuclear energy in this country. And if microgrid nuclear becomes a thing because of the need for energy to power the compute, that's a worthwhile outcome. It's interesting. I'm a lot older than you, and yet I'm still young enough that 3 Mile Island happened before my level of consciousness, right? And what I have noticed, try this out going forward as an experiment.
Okay.
If you talk to anyone who's so I'm 52, right? So anyone who's my age or younger, yeah, they're like, we should have nuclear power. Absolutely. It is plentiful. It's expensive to generate, but then once you do, it's a lot cheaper and it's totally environmentally clean. It makes total sense. Yes, there's some risk, but the trade-off is we're destroying the climate right now, which has all kinds of risk, right? Massive hurricanes and earthquakes and tornadoes. So there's risk either way. Anyone for whom they were kind of aware enough, so maybe, 10 or 12 and older when 3 Mile Island happened, totally different perspective from them. They're like, no, that's crazy, way too risky. We can't do nuclear. And so I think that as that group ages out of power, there will be a lot more acceptance of nuclear again, because I'm pretty old at this point and I'm still on the young side for this particular issue. So one good thing that might come out of all of this, even if it turns out that a lot of the spend ends up being unnecessary, and therefore, by the way, a loss for the shareholders of those companies eventually, right, is maybe we will get a much better clean energy system out of it. And for whatever reason, Trump, who is wildly opposed to wind and solar for reasons that still don't make that much sense to me, doesn't seem to have a problem with nuclear.
There's many different points in there that we can unpack. It's really interesting seeing how many data center deals are coming through.
Endless.
I see endless because it's a new gold rush. AI is a gold rush. It's causing all these different picks and shovels. Infrastructure is definitely a part of that. We have training, we have nuclear, we've got energy, we've got the power bottlenecks, and then we also have the data center bottlenecks. And then we also don't know what is actually going to be the moonshot unlock here. We don't, because there are lots of things going on under the surface that we're betting on incrementalism for most of these valuations. We're betting on incrementalism with these companies and how they're going to compound. We're not taking into effect what's going to be the moonshot unlock.
What if DeepSeek was the moonshot?
Yeah.
Right? What if the inference model was the thing that's we only need 10% of the energy in the compute, and it turns out that this other 90% is basically wasteful? I mean, I don't know. And in a weird way for the American economy, I guess I hope that DeepSeek is wrong. But putting that aside, yeah, we don't know. And by the way, the most ironic thing is the underlying thing we're talking about here is AI.
Mm-hmm.
And if anything can figure out the moonshot, it's AI, right? So that's the most ironic part of all of it. Like, or for example, if you start taking this as like third and fourth kind of gradient thinking, like, okay, so maybe most of the AI infrastructure spend turns out to be wasteful, but maybe the upside is that nuclear happens as a result.
Yeah.
And maybe because of that, we have so much AI processing power that then the AI exists to figure out decarbonization overall, right? Like, it seems to me, like I'll recycle something today, I'm sure, but as someone who worked in New York City government for a long time, it all goes in the same landfill.
It does.
Right?
It does. I don't know why people do this.
I do it just because it's like literally 2 bins. I put it in the right one.
My sister gets fined at her apartment. I'm like, Megan, I don't care. And I'm not washing it because it's all going to the same place.
Correct. But so to me, that's not going to solve climate change.
Yeah.
If we solve climate change, it's because we eventually figure out how to effectively remove carbon from the atmosphere and things like that, whether it's sucking it out or trees that can absorb more CO2 or whatever it might be. And that probably is a challenge for AI because, there are carbon capture plants and startups right now. You've probably even talked to some of them and they're really interesting, but it's like very nascent, right? It's still a pretty big risk if you were an investor because it's an incredible amount of CapEx for something that still may or may not work. But if we do solve climate change, I have this general view, and now I'm probably getting way off. You have to edit landscape to edit this out because it's going way off course. But I like to look at humanity sometimes as we are in a race to save ourselves before we destroy ourselves because we are doing both things simultaneously all the time. So think about climate change. When they invented the car, when they invented hairspray, whatever it is, right? Things that ended up in one way or another being bad for the environment. No one said, my goal is to destroy the ozone layer. What I really want to do is make the earth uninhabitable in 100 years. That's why I'm inventing this product. It was, I have something that has value to consumers, right? That has value to society. The car fundamentally transformed the economy, right? Hairspray, aerosol as a product is before my time, but obviously became at a time a more convenient, cost-effective way for people to be able to do their hair. Fine, right? There's nothing really wrong with that. I mean, if you think about every startup founder that I talk to about investing, or you talk to, as in an interview, it's fundamentally they believe they have a product or service that has some utility, because otherwise they wouldn't be doing it, right? So in all these cases, and then it turns out that in these good things that happen, like economic transformation, because now we have a car instead of a horse and buggy, there's also fossil fuels that are being burned and polluted, which then lead to other things. So then we have new technology, ultimately, hopefully through AI, that leads to like, okay, now we're going to find a way to take the fuel and take the toxins that came from the fuel out of the atmosphere, right? So, or vaccines, right? So like putting aside the whole crazy anti-vaxxer thing right now, like vaccines were a scientific development to figure out how to take diseases that occurred typically in nature and protect people from them, right? Mm-hmm. A lot of that same learning leads to advancement of bioweapons, right? Which could be incredibly dangerous and wipe us all out. And then at the same time, they're working on more vaccines to be able to contradict the potential risk of bioweapons, right? Or even nuclear. When Truman dropped the bombs on Nagasaki and Hiroshima, you can debate today whether or not it was a good idea, but like there was a clear purpose to it, right? Which was we were at war. We had been at war at that point for 5 or 6 years, 38th or now, wherever we got in. I don't remember. Anyway, and it needed to end, right? Mm-hmm. And that was the way to end the war. Like, I don't know that if I were president, I would have reached any different conclusion than Truman did, right? However, it's also the thing that is the easiest way for us to sort of destroy humanity. And arguably the greatest achievement of human history is that no one in the last 80 years has used nuclear weapons, even though it's proliferated now to, I think, 9 countries plus whatever Iran does or doesn't have. So, and then the question becomes, in that case, there might not be a technology that can counteract nuclear, but can we advance enough as human beings to remove them as a threat, right? So it's always like by definition, because human beings are so unevolved, right? We're only like, at most, we've been a species in this form for a couple of 100,000 years. And most of the stuff that I read is more like 60,000 years. I mean, the universe is 14.8 billion years old. The Earth is something like 4.5 billion years old. So, like the average human lifetime, even with 100 years, is like 0.0, and you have like 10 zeros before you even get to a 1 of the entirety of the universe. So like we're so new and so unevolved that we're like this fascinating, like in some ways, like you could almost see humanity as like the ultimate Shakespearean play that the gods created to be like, let's entertain ourselves. Let's create these beings that are in some ways amazing, in some ways horrible, in some ways brilliant, in some ways moronic, right? And let's just throw it all fucking together and see what happens.
Yeah.
It's reality TV, right? But like in some ways, imagine it from a macro standpoint, and we're so perfectly imperfect that we're just in this constant race to sort of both advance ourselves and save ourselves without destroying ourselves. And then that gets to, and this is ending up being a far more philosophical podcast than you meant to have.
I love it.
Like, arguably, I would say the central question of our time is zero sum versus abundance, right? So there are really two fundamental ways to view the world. One would be everyone's for themselves, it's everyone versus everyone, and you just have to get as much as you can in the time that you have without the cost to you being so severe that it outweighs the benefit, right? Which, in some cases means people like literally just figure out ways to not get indicted for things or whatever it is. And whoever has the most toys wins, right? And I think Trump in many ways is the ultimate manifestation of a zero-sum mentality, right? He views success in life as who has the most money, who has the most power, who has the most influence, who has the most beautiful women, who has the most luxurious airplane, the most gold plating, literally whatever it is. He doesn't ever seem particularly happy to me, even though he accumulates more of that at this point combined maybe than anyone, right? And the other way would be sort of an abundance mentality, which is we're happier when we are doing things that give us some sense of purpose and meaning. So I've studied like a ton of happiness science and behavioral economics. Like I studied behavioral economics when I was in school. And then in my 40s, started studying happiness science in part because my own life wasn't that happy at the time. And as I was realizing I needed to get a divorce, at the same time, I was sort of trying to really understand what is it that makes human beings happy. And there's really just two things, right? It's relationships where there are people in your life who love and support you unconditionally and you love and support them unconditionally. Doesn't mean you can't have disagreements with them or disapprove of something, but fundamentally that's there. And the things that give you meaning and purpose, right? So for example, you've been to my bookstore. So I own a bookstore on the Lower East Side of Manhattan. It is a bookstore. It is a podcast studio that anyone in New York can use or anyone wherever can use for free, an event space and a cafe. It loses so much money. It is the worst business in all of New York. However, the way I look at it is I look at how much money do I lose on the bookstore? And it's funny, the other day I came up at lunch with some friends and they like literally gasped. But at the
what
same,
is it?
I mean, I lose around $1 million a year.
Oh my God.
Yeah, all in. But so here's what I did. I don't fly private. And yesterday I had a disaster trip home from San Francisco and probably wish that I had. But like most of the time, it's fine, right? 98% of the time, it's fine. And I looked at, okay, let's say that over the course of a year, I travel a lot, right? Domestically, if I just flew private instead of flying commercial, what would I spend? And it ended up being about the same amount of money that I lose on the bookstore. So like, okay, this is a great A/B test. Forget about whatever the bookstore does for anybody else. And, sure, it creates some jobs, people for their podcasts, put all that aside, right? Just fundamentally, for me, for Bradley, which of these two things will make me happier? Because it's the ultimate sort of zero sum versus abundance sort of A/B test, right? So if I spent that money on flying private, what do I get? A little more convenience, can avoid the TSA line, which usually with clear and pre-checks like a minute, right? But sometimes maybe it's 10. And I would find ways to brag to people sort of like, in a nuanced way that I flew private, right? And then they probably think I'm a douchebag anyway, right? But nonetheless, that's sort of the upside of flying private. And upside of the bookstore. I record my podcast there twice a week. I should plug it. It's called Firewall. If you like
Great
this,
podcast.
you'll like that. If you don't like this, then you definitely won't like that. We have events there all the time. I take meetings there on Fridays usually. But most of all, do you know what I like about it? People pat me on the head constantly and tell me how wonderful I am because I own a money-losing indie bookstore in New York City. And people like bookstores, and I get a lot of validation and affirmation. So the meaning and purpose I got from the bookstore, not because it does anything for anyone else, but simply because if you just said, which of these two things will make me feel better? People admiring me and praising me because I flew private, or people admiring me and praising me because I own a money-losing bookstore? It is like the ROI is significantly greater on the bookstore, right? Just from a pure selfish standpoint. So I would argue that for happiness generation, the two things that are proven to be the most effective are cultivating and really investing in relationships with people who you really care about and really care about you. So like, for example, I keep a running list of the 50 people at any given moment who I kind of matter to me the most. And it evolves a little bit over time. And then usually once a week on the weekend, I'll just run through it. I'm like, okay, I haven't talked to so-and-so in a week or 2 weeks or 3 weeks, whatever it is. And I'll text or I'll call. And you know what no one has ever done? Texted back saying, why are you bothering me? It's always like, hey, great to hear from you, right? And then you have a pleasant exchange that might lead to some sort of plan, or it might just be a nice check-in or whatever it is. But either way, and then I try to really look at and look, I am lucky to be at a point in life where I have enough money to do what I want to do. But I also choose not to do I don't have a big house in the Hamptons, right? I don't have a plane or a boat or anything like that because I invested in stuff that I care about instead. And I truly believe that I have figured out kind of the formula in many ways to happiness because I effectively just prioritize relationships and purpose ahead of everything else. I still make money. I still need to make money to do the things that I care about and to further them. And I also just like making money. I like being in business. But nonetheless, I truly believe that if you can adopt that mentality, your odds of long-term sustained happiness are significantly greater. And I think whether or not humanity realizes that, especially in the first world where you don't have to worry about, again, some people do, but the vast majority of Americans don't have to worry about, being homeless or don't have to worry about not having any access to healthcare of any kind, right? At least there's an emergency room or something. Assuming that you have the very basics covered, at that point, it becomes really a question of maximizing happiness. It becomes a math question. And that ultimately gets to zero sum versus abundance. And I really think that it is both on an individual level, the most important question that we can answer for ourselves, and on a societal level, if we want to sort of bring ourselves to extinction in the next 50 or 100 years, zero sum's a great way to do that. If we want to see our children's children live and thrive, then it's got to be an abundance approach. And ultimately to me, that's what life comes down to.
Sourcery is brought to you by Brex, the financial stack trusted by more than 30,000 companies, including 1 in 3 venture-backed startups in the US. Nearly 40% of startups fail because they run out of cash. Brex is literally built to help founders avoid that. Unlike traditional banks that let your money sit idle, chipping away at it with fees, Brex is designed to help you spend smarter and move faster. Their all-in-one solution combines checking, treasury, and FDIC protection into one powerful account. You can send and receive money globally at lightning speeds, get 20 times the standard FDIC coverage through their partner banks, and even high yield from day one. With same-day and even same-hour liquidity, access your funds anytime. Companies like Scale AI, DoorDash, ServiceTitan, Hims, Anthropic, Flexport, Robinhood, and Plaid trust and use Brex. Start today at brex.com/sorcery. That's BREX.com/sorcery. In today's high-speed business world, staying ahead means using the smartest tools possible, including the powerful capabilities of artificial intelligence. Meet Turing Intelligence. Turing builds customizable AI systems designed to solve your mission-critical challenges no matter your industry. From expert guidance to tailored projects, Turing helps top companies realize AI that's more capable, more adaptable, and more effective. With Turing, discover how AI can accelerate your business growth. To learn more, visit turing.com/sorcery, spelt SOURCERY. That's Turing.com/Sourcery. Sourcery is proudly sponsored by Carta. Carta is transforming the private marketplace, connecting founders, investors, and limited partners through software purpose-built for private capital. Trusted by more than 65,000 companies in over 160 countries. Carta's platform of software and services lays the groundwork so you can build, invest, and scale with confidence. Carta's fund administration platform supports over 9,000 funds and SPVs, representing nearly $185 billion in assets under management, with tools designed to enhance the strategic impact of fund CFOs. For more information, visit carta.com/sorcery. That's carta.com/SOURCERY. Wow. Yeah. It's really interesting. I'm thinking about a couple of the past conversations I've had and how this relates to job and purpose and meaning. And there are some people. I interviewed Naveen Shada from Mayfield, and he says, oh, well, with AI, we'll be able to do as much as we want. We'll be able to work from Hawaii. We can have 5 jobs because it'll all be running and we'll have just more time to ourselves. Maybe. Same with Jonathan from Turing. He says the same thing. Like, why can't I run like 10 companies like Elon? Like, I could do multiple things if I wanted to, or maybe not. But it does present an opportunity because I mean, I've seen in my day-to-day, like I now have like so many projects all the time because I can get so much more done. But for some people, like there are other constraints.
How much of that though? Let me just challenge it for a second. Okay. Right. Which is, yes, but you choosing to do that, is it ultimately your ability to do it successfully, which you do? Is it the product of, oh, here's this technology that before just wasn't available to me and therefore it made it impossible? Or you make choices, right? And the choices you make, which by the way include all kinds of sacrifices, right? We were talking before the podcast about like you live in LA. I hope your security or anything like that. And like it's a pain in the ass for you because you're working in New York and San Francisco, right? But like at the end of the day, we make choices and the choices facilitate what you can then do, right? Like for example, I spent a ton of money on my team because everything that I don't want to do and don't have to do, I don't do. Yeah. And that frees me up to do all the things that I do want to do. And that's why I have like multiple companies and a foundation and all kinds of other stuff, because in part, I pay other people to do a lot of things for me. What does that mean? I have less money at the end of the day, right? But I made that choice. So do you buy the notion that it's technology, or is it really fundamentally just about your choices?
No, I think it's absolutely choices. Like I choose to work really hard because I like working really hard. And I also have this like moment in time where there's so much momentum that I am taking opportunity. Right. Yep. I do know that I'm making so many sacrifices. I'm making sacrifices to friends. I'm constantly letting them down because I have to work. I'm making sacrifices to my family. I'm not going to certain events. Like they're very close. They all live in Connecticut. I don't do that much. I have sacrifices for my own personal life, like different decisions not to go on dates, to just cancel things because I just want to work. Sure. And like I'm constantly traveling between cities. I have a selfish reason of like having my apartment in LA because between all this chaos, I like to go back to there and like have a weekend. And then I like to go run around and like do all my interviews. But I know that's a choice. Like I know for a fact there are some people that do have access to this technology and they don't care. Like they just use it for the day to day and then they, have their leisurely activities. But unfortunately, I'm competitive and I want to succeed. So I'm like, how can I maximize my opportunities right now in this window?
Yeah. You at least, I will say, how old are you? All right. So you have vastly more self-awareness than I had. And so I had the same, in some ways still do have the same mentality that you have right now. But I think where you're probably way advanced than me, and that probably gender is part of that too, is not only did I think what you thought, but I thought the people who didn't make the choice I was making, there was something wrong with them. Like they were leading a lesser life if they chose to live a more subdued, work 8 hours a day. It's just part of your life and spend a lot more time doing leisure activities. And I've come to realize that like you're you for reasons good and bad. I'm sure some of it is, genetic and some of it's trauma or whatever else that has shaped you, just like the same thing for me. And therefore that's how we need to act. But ultimately, if someone else can have fulfillment and contentment with half of the effort because that's better for them, like that's fine. But it took me much later in life to have the wisdom to understand that. Whereas everything you just said was basically almost an acknowledgement of like, hey, this is what I choose. It's right for me. but there's no judgment on someone who chooses something else.
Yeah.
So you should feel pretty good because it definitely took me like several decades to get to where you are.
Sometimes I feel good. Sometimes I need to go to the spa and get a massage.
Sure.
This will be a shift into investing.
Yeah.
Because I think this does package itself well into how you chose to lead Tusk Ventures and how you're now going into services for equity.
Yep.
So can you talk about that shift?
Yeah, sure. It's so I don't, unlike most people you talk to, like I didn't start off in business or technology, right? I worked in politics and government for years and years and years. I made government salaries or campaign salaries for years and years. And then I kind of fell into tech totally by accident, right? So my last like real job was in 2009. I was Mike Bloomberg's campaign manager and ran for mayor of New York City. We won. And I decided that I thought there was sort of in the kind of political consulting business, a hole in the model where typically people did one of two things. Either they ran comprehensive campaigns for companies or institutions or candidates, wherever it was, but in one place, or they would work nationally, but they would offer one skill set. They were a pollster, they made ads, whatever it was. And my view was that the world had changed enough that the way to get things done in government and politics was no longer like a guy knows a guy and you know the right guy. It's really multifaceted, right? So yes, it's the inside game of lobbying, but it is also earned media and paid media and social media and grassroots and all these other tools. And I felt like the amalgamation of experiences I had had, both in terms of the things I've done and the different places that I'd lived and worked, said to me, I think someone could do everything everywhere. And that was sort of the genesis of my first company, Tusk Strategies, which I don't run anymore, but still exists, a political consulting firm. And so about a year into that, I'm sitting in a Walmart meeting and a friend of mine called and said, hey, there's a guy with a small transportation startup. He's having some regulatory problems. Would you mind talking to him? I become Uber's first political advisor that day. I get really lucky when Travis calls back and says, listen, I can't afford your fee. Would you take equity? And thank God I said yes. And that became very lucrative and allowed for a lot of other stuff that I do today. But the experience that I had was effectively running campaigns all over the US to legalize ride sharing. And what we figured out that was really both transformative for Uber, but really informed a lot of the investing I've done ever since, is in certain cases, you can turn your customers into political advocates, and you can use the very technology that you engage them on for business politically. So for Uber, the taxi industry was a very, very big, it's hard for like someone your age now to sort of imagine this, but like was this incredibly powerful industry, right? And we were a tiny, seed Series A startup, right? And Travis, is a genius and has transformed society. But he didn't have this great track record. He had a couple of failed startups before that. It wasn't like someone had it wasn't like Elon Musk doing his next company, right? But the experience of taxi was so bad for so many people, and Travis figured out a way to do it that was so fundamentally better that he had this belief, and he was right, that ultimately people would fight to keep that opportunity. And as taxi would then use their lobbyists and their political muscle to try to put us out of business, which they tried to do in every single market in America, we saved ourselves by going to our customers and saying, look, if you like this Uber thing, we need you to let people know. And we built functionality directly into the app that let people tell their city councilman, their state senator, whoever the relevant person was, leave this thing alone, I like it. And so many people did. That ultimately became more powerful than the donations and lobbyists taxi had, and we won. And so as that's all emerging, I'm like, okay, this equity thing. Like I remember literally the first time, I took the equity mainly just because I liked Travis and thought it was interesting, and I kind of wanted to work on it. That was it. I literally didn't even know what the phrase equity meant from a business context when I said yes. And then I remember one day, it was nighttime. We were on the phone about some regulatory issue somewhere. And he said to me, how many shares do you have? I'm like, I don't even know. And then he helped me figure out how many I had. And he said, oh, we just closed a round. Your shares are worth $12 million. I was sometimes you remember literally exactly where you were and what you, I remember where I was in my apartment, what I was looking at, because I was floored. Because I'm a first generation American. I didn't grow up with that much money. I worked in government for years. I mean, after law school, I turned down all these jobs at law firms offering 150 grand or whatever it was at the time to make $28,000 at the Parks Department of New York City, right? So like to me, money wasn't like a thing. And it's not that I didn't want it. It just didn't, I didn't really understand like how much money you needed. It never had literally occurred to me that I would ever have $12 million. Like it just had never once crossed my mind. I remember being so fucking blown away by that. I was like, oh my God. So this equity for services thing is pretty good. So I did it again with Clear to get them to airports, and it worked out really well. Not anywhere near uber well, but it was really good. And then I wouldn't call it a mistake because we made a lot of money and it was a good learning experience. But I made the sort of view of like, oh, well, the really rich people have funds, so I should have a fund. And so I went out and raised my first venture fund. Started in raising 2015. We started making our first investments in late 2016. FanDuel was our first investment. And my thesis was, look, there's no fund out there that is regulatory first. And so many startups have regulatory issues, and Uber in some ways was sort of the perfect example of that. And I had gotten credit for being the person that did it. That I can find more of these and I can invest in them, and they'll want me to invest because they're going to want my help from a political standpoint, and we'll make a lot of money. And so we did. So we did 3 funds. Fund 1 was so hard to do, but we raised it finally. It was $35 million, but it's sitting at like about a 5X right now. We'll see where we're in Circle. So we'll see where Circle exits in a few weeks when the lockup's done. But really well. And Fund 2 was 70 million. Fund 3 was 140. And the funds have done incredibly well. But as we were about to start closing the first round, circulating the subdocs for Fund 4, it kind of hit me that like it was the wrong business model. Because what I realized was founders who took our investment did so not because they needed my money, but because they wanted our help politically. And ultimately, I started talking to them like, let's say I just asked you what I did with Travis. Just, hey, just give me equity. But I'm not going to give you a check. Like, yeah, we don't care. Fine. Like, we didn't need your money. Like any really great startup to get into typically doesn't need your money in the first place, right? Anyone who desperately needs your money, there might be a reason why. I mean, occasionally there's a diamond in the rough that no one believed in, but generally speaking, that's not the case. And I was like, why am I, A, giving 80% of my profits back to my LPs, right? I don't actually need them. B, I have a great partner named Jordan Knopf, who's a brilliant, brilliant investor, but he's a traditional venture capitalist, and we split the equity and the carry and everything else, which was reasonable, but I didn't really need all that stuff. I didn't need to worry about portfolio construction. I didn't need to worry about fund administration. I didn't need to worry about compliance. I didn't need to deal with taking board seats. And so I pulled the plug. I said, we're not going to raise Fund 4. And I'm going to do a hybrid of the first 2 models. So I announced this back in February, I think, of 25. And it's equity for services. So what I did with Uber and with Clear, but now also pro rata. And then as our investor rights come up, I'll either invest off my own balance sheet. So there are companies since that I've said, you know what, I love this company. And it's, an amount of money that I can afford to deploy out of my own capital, and I'll do so. Or I have all these investors that made a lot of money with us. And I'll just go to them and say, hey, here's a company that I really like. The round is bigger than I can take myself. Do you want to partner and do SPVs? And for me, from a financial and kind of time standpoint, it's better because 1, I own 100% of the risk, but I also own 100% of the upside. Now, I do every year now because I have a team of people who work at the company to both source deals and then more importantly, help all of our portfolio companies solve their regulatory problems. I have to pay those people every 2 weeks, whether there's a liquidity event or not, right? So it costs me a couple $1 million a year on the front end, but I then also own all, I gave the employees about 25% of it, but I own all of the rest. And that's a lot greater ultimately than the carry that I had at my fund in terms of upside and leverage. And A, B, I don't have to deal with fundraising anymore. It's a pain in the ass. Yeah. Like it's a huge pain in the ass. And the reality is I'm not good at it. And a lot of the things that have allowed me to succeed professionally are the same things that were hindrances for me for fundraising, in that like I'm a misfit, right? Like I don't fit in well. I wasn't popular when I was a kid. I'm not comfortable like in big social settings. Like I like my friends and I like to work, but like I don't go to, like, you probably have to go to all of these like networking things. Like I don't go to fucking any of that, right? I mean, even like conferences, I show up, someone meets me, they put me in the green room, I have a cup of coffee, they mic me, I go speak, I take a few pictures with people, and then I'm out the side door, right? Like I don't want to socialize.
Yeah.
Like even like the other day I was in San Francisco and did an event for Tech Week. I was very happy to do the event. The 30 people that came up to me afterward, and I had to like hear every one of their pitches and everything. I was like, oh my God. Like there are people who feed off of that. That's not me, right? So as a result, I was not a good institutional fundraiser because I don't play golf and I don't like hang out at a country club or any of that kind of stuff. And like, yeah, I go to lots of Mets and Knicks games, but I don't take clients. I take my friends, right? Or my kids. And also what it turns out that institutional investors want to hear, they think they want to they think they want a differentiated strategy. They don't. What they want is, this is exactly what you already know and are comfortable with this tiny twist that could deliver some alpha, but at the same time isn't too risky, right? Yeah. And like, it took me years to even understand that. And then even when I knew how to say the right things, like it wasn't genuine, right? And so I think people can feel that. So I don't have to fundraise anymore. I don't have to manage LP relationships anymore. I hate sitting on boards because I don't add any value. I am only good at one thing: solving your regulatory problems, right? Or creating regulatory opportunity, arbitrage. And I'm going to do that anyway because I'm an investor in the company. Me sitting in the board and hearing about the CAC or hearing about the burn or the next raise, like, I don't fucking care. And I don't add any value to that conversation, right? So, but when we were investors, we're taking lead positions. We took board seats, right? So I had to sit on boards. Like I have a couple that I'm left on, but other than that, I don't do that anymore. Portfolio construction, all that shit. Like I don't do any of that anymore. And I own all the economic upsides. You put all that together. So for me, this is a much better model. And I would say for the people listening to this, look, most people, in order to gain access to highly disruptive, highly promising startups, have to write a check to get equity because that's how the model works. But if you have a particular skill set, so there are lawyers that can do this, there are marketing people that could do this, you could do this with media, right? Where you're like, hey, I have this thing you really need. I believe in you and I'm going to bet on you, right? I'm not asking you for cash. I'm just betting on the upside that you're going to succeed. Give me equity. You can make that sale. And if you can make that sale, it is a much better model. Does that answer your question?
That does.
Okay.
So really
did I just change
answer.
your worldview on what your career is going to go?
No, I mean, I've been getting some advisory shares from people. They offer it to me, which is amazing.
Were you ever thinking of raising a fund?
Similar to you, like I know what it takes to raise a fund. I've worked at a couple emerging managers, emerging partners and funds. I don't like that. That is like adding another job on top of the job, and it clouds your judgment, and it makes you orient the practice and everything that you probably find is like your superpowers and what you enjoy out of investing. And it like, you have to like come in with the mindset of knowing that it is like a multi-dimensional practice, and that like that is just one component of it, but it is a very large component. And you always have to be fundraising. You always have to be like networking with LPs when you're on the road meeting founders, because it's like a cycle that just continues. So like in the beginning, like there are so many people that have reached out to me about starting a fund or like having me as like a co-GP, like something like that. And I just like, I'm focused on this. Like I need the power law for this to win. And then maybe other stuff will come across, but like it would be a huge distraction.
And even then, if you get to that point, I would still say, having now done both, the advisory share model. Now, ideally, you get to a place like where I'm in, where I can then either have the capital or raise the capital to sort of continue on. It's just much better. Like, I don't even really think it's now, here's where that's not true. I'm, for the same reasons, not a great fundraiser. You know, my biggest fund was 140 and fund 4 would have been, you know, roughly the same size. If you can raise billions and billions and billions of dollars, and effectively your business model is your management fees and not the carry. And, you know, a lot of people raise mega funds. Their superpower isn't investing, it's raising institutional capital, right? If that's your superpower, then yes, then that's the right approach. Because if you have $10 billion under management, you're getting $150 to $250 million a year in management fees, and business doesn't cost nearly that much to run, so you're pocketing the rest. Like, sure, that's great for as long as you can keep raising the money. But if you're not in that position, it seems to me that if you have the opportunity to do equity for services, it is just unquestionably a far better approach.
Yeah, it's interesting. Carta had just put out their recent VC fund performance report. And so you're seeing this in the data of like the VC market itself. There is a huge bifurcation in this, barbell effect that Mark Andreessen talks about too, is like, there's like always going to be like the small emerging class of managers.
Yep.
It's healthy. It's doing well. There's like this huge gap in the middle of like medium-sized managers. And then like the large funds just keep compounding because they've got the super power law dynamics within them.
Totally. Right. Yeah, I think that's right. So I think the question is, if you're an emerging manager, and let's say you don't have the thing that you or I could do where you could just get the equity elsewise, if you can run your fund at, say, sub 50, my advice is to do that, right? Because the challenge is, so like when we went from 35 to 140, the upside was we had more management fees. It made life easier. It was a little less of a scramble, right? But at the same time, we still ended up basically spending all the management fees on the operations of the fund. It wasn't like we were taking home lots of cash at the end of the day, but now the hurdle is 140. So for fund one, we won the money so fast because the hurdle was 35, and even some of that was like SPV. So the actual hurdle was like 22 or something. And we got there quickly, and we were in carry, and then we were in super, we got like a trigger to get 25%, like all of that really quickly. Whereas with fund three, the investors are, based on just me looking at the fund, like the investors are going to make money, like it's going to work out for them. But I don't know how much carry I'm going to make. And I also didn't make that much of the management fees. And so 140 is like the worst possible size, right? If you can do sub 50, get a couple of great hits and really ride those, great. If you could do billions of dollars and make a ton of money in management fees, great. But that in-between number, like, at least for me, it didn't make sense.
Yeah, it doesn't make sense. It's interesting because I don't think, like, many people think about VC and it's like a very sexy, it's attractive industry, but they don't understand the actual dynamics of structuring it out. That you're actually probably not going to take in that much money, and most managers are poor for a very long time. Yeah.
And even like, it's funny, there's this sort of view of like, well, if you're early stage, as long as you have a couple of home runs, you're in great shape. Even that's true if it's, a $35 million fund. But my second fund is $70 million. It's sitting at a 3.5x right now, but has no DPI, a couple minor secondary things, but no real DPI yet. Again, the investors are going to do really well. I don't know that we're going to do that well on it, right? Because you got to return the 70 and the management fees, and then, we'll make money. But the truth is, you probably need, like, we have one absolute grand slam in that fund, right? That we led the Series A at like a 30. It was Elma, which is a mental health startup that does kind of the back office. And I think we led the A at 32.5. And, valuation now is at least 50x, right? But everything else is like, there's a couple of probably 5 to 10x's and then a bunch of 1x's or zeros. It will work out well for the LPs. When I kind of look at over a 10-year period between the management fees from that and the carry, how much I'm going to make, like, again, not a great use of my time. Mm-hmm. Like, I still own my consulting firm. I don't work there anymore, but I still own it. And like, I look at the profits that generates, and that takes me a couple of hours a week of management and maybe some pitching. And then in comparison to that, like, a lot of the venture math isn't there at all.
Yeah. The math isn't mathing.
Yes, exactly.
So there's that component of the macro of the venture capital world right now. And then there's also the AI component, which we talked about a little bit before. But before we started recording, we were talking about valuations and how that's impacting whether you're an AI company or a non-AI company. Right. There's also data in Carta that Series A companies get a 30% premium on them compared to if they're AI versus non-AI.
Totally.
And I think it's probably more than that because, like, I mean, if you reduce it down to good companies, the delta is going to be much greater.
Yeah, for sure. I mean, look, we see this all the time, which is there's so when I started investing capital, so that's 2016, we were in this sort of a golden era of venture where all that mattered was growth, right? No one's like, oh, we'll figure out the business model later. We'll worry about profitability later. And that worked for a while. Like we had some, FanDuel and Coinbase, with some great successes out of that. Some of them became really profitable companies. Some did not. But fundamentally, it was ultimately bad economics. It was irrational exuberance where everything was just sort of based on this incredible enthusiasm about the future. And by the way, at least with AI, there's like this concept of some sort of breakthrough that we can't totally understand. Like back then, there wasn't even really that, right? A lot of the tech was like a marketplace. It's not that complicated, right? Like me and Lance could build a marketplace this afternoon if we really wanted to, right? And then the bottom fell out in like 21, right? And then everyone's like, oh, right, this is a business. We need to worry about unit economics. We need to worry about EBITDA. We need to worry about CAC and like all these things. Like, okay, fine, makes sense. Now we're in a world where we're living in both realities at the same time. So when it's a non-AI company, the post kind of drop-off mentality still typically applies. You really are looking at like the fundamentals of the business itself. And ultimately, will P be greater than L? And will P be so much greater than L that this is going to become a really valuable company, right? When it comes to AI, we're back to this like, oh, it'll all just kind of work out, right? When I was telling you about a company, I won't name the company or the firm that won the deal, but it was the deepfake prevention space. They had about $1 million in ARR. And I offered 3.5 on 35, which I actually thought was kind of generous, right? The winning bid was 14 on 140. I have no idea how that investor is going to make back their money on that deal. If you were an employee now coming in at the A or beyond at 140, I'm not really sure how much. Like if someone came to me to try to work at this company, I'd probably, if your only goal is to maximize the upside of the equity, like probably not, right? And yet, because it was just AI, somehow all the normal rules went out the window, right? And so for us, like the other day I saw a company in the mental health chatbot space that is heavily regulated, definitely could use our help, has an insanely high valuation. Maybe it'll grow into it, maybe it'll be worth it, maybe it won't, I don't know. But ultimately realized that from an equity for service standpoint, like didn't make sense for me because I just, there's no point in me taking a bet on a company that could there's a million reasons why it could still fail, but hope that it'll be a 5 or a 10 or a 20x if the starting point is so incredibly high that I just don't see any world, if you just look at the market, where this could possibly be the case. It's kind of like I didn't do any cannabis deals. And the reason I didn't do any cannabis deals was not moral on the slightest. It was just that when I looked at the valuation of the deals that I was seeing, and then I looked at the comps on the Canadian market, which does allow cannabis trading, it was like, I don't really understand why these American private companies are so highly valued, because when there eventually is a liquidity, if you look at the market that, and Canada's a capitalist country, right, that has trading it, like the multiples aren't nearly what you would need it to be to succeed. And so like, other than some equity for services with ease, like we never did any deployment of capital into cannabis simply because it just didn't make sense to me from an economic standpoint. And by the way, one or two maybe have disproved that, but not many, right? Like I don't really regret that decision at all. I'm not saying AI is cannabis. AI obviously has a hell of a lot more potential than cannabis, but I kind of still am applying that mentality to it. So a lot of the deals that I'm doing are in AI, but they're all really companies where the Series A is still sub $100 million, right? Or right at 100 million, which is still kind of high, but nonetheless, not totally insane. And if there are companies where it's well north of that, I'm just like, it might be, maybe I'll regret this. Maybe it'll be a great company. If you really want a regulatory help, I have a consulting firm that would gladly take your money, but I'm not taking the equity.
There's something about regulation that I find really curious, and I think it's become more apparent this year, particularly with the new administration and all their efforts in advancing different sectors. Like we talked about nuclear, like we talked about AI, like there are so many different areas where you're getting the connection between Silicon Valley and DC that it seems pretty amicable, and it seems like it's actually progressing growth.
So that's a really good question. I don't agree with you.
You don't?
No.
Okay.
I would say that there is a narrative that supports what you're talking about, and reporters really like that narrative.
Okay.
And there are half a dozen people, Mark Andreessen, David Sachs, Chamath, others who are big Trump supporters, Peter Thiel, Elon in a way. And they've done really well, right? It has, they've invested in a person who has a zero-sum mentality to the world. And in that person's worldview, if you are helpful to them, you can really do well along the way. Like, look at all the people who are investing in TikTok at a $14 billion valuation, right? Like, if you're Larry or, Ellison or whoever it is, like, amazing, right? But I would say that's sort of individual companies getting contracts or government favors, but it's not the market, right?
Okay.
So if you were China, and you had the ability to install an American and control an American president. There's like an old movie called The Manchurian Candidate that's about that. I think it's Russia. And you said, I really want to hurt America long term. Here's what I would do. I would go after what makes our economy great. So what is that? It is intellectual property. It is research and development. It is higher education. It is immigration, because we can get the best and the brightest from all over the world to want to come here and then become part of our economy. It is free trade. It is independent Fed, an independent, somewhat independent BLS. It is sort of, an independent market, right? So there are all these fundamentals. Trump has undermined every single one of those things. So I would argue everything that makes the American economy great, that venture capital totally relies upon at the end of the day, is being undermined significantly. And so if you said to me, are you as bullish about VC in 10 years if the trends don't reverse? Now, hopefully we'll have a new president, whoever it is, in 2028, because hopefully we won't have sort of martial law or whatever. And maybe that person from either party will reverse some of the policies. But at this current rate, I would say the American economy is far weaker long-term than it's ever been. And I would be far less bullish on it. So, and by the way, because of what I do for a living, like, do I know how to get a startup into DOD or HHS or whatever it is, the FDA? Like, yeah, there's a skill set that we have that, we figure out the right ways into things. So it's not that we don't even take advantage of it. We do. But from a long-term American standpoint, I actually think that VC is a sector for those who participated in this, unless they just made so much money and only just care about how much money they have and nothing else, are going to really regret it.
So I'm curious on your perspective on this part in particular. So the US has over $37 trillion in debt.
Yep.
And so a lot of people are counting on AI and the technological innovation that is going on that's in these narratives to unlock that and offset it.
How?
By creating economic prosperity.
Sure. Look, by the way, again, the title capitalist is literally in my job, right? Venture capitalist. I believe strongly in capitalism. I would say everything that all those points I just made to you are what capitalism is, right? And what we're doing now, especially with the US government just taking 10% of Intel or whatever it is, that's socialism. Yeah. I'm not a socialist. Like, yes, what you just said is right, but that's based on fundamental capitalist principles and theory of which we are not advancing right now. So, like, if you take the big, beautiful bill, for example, we took on a couple of $1 trillion more in debt, and I'm not really sure what the upside is, right? Like, it might benefit me as someone at the very top of the tax curve, but what am I going to do with it, right? Like, I'm not, fundamentally, people at the bottom of the ladder spend a lot more money. Like, if you actually want to juice the economy, you want to give tax cuts or benefits to the lowest income people because they're going to spend every penny of it, right? If I put it in treasuries or whatever it is, like, that doesn't really do any long-term good, right? Other than just a lot more borrowing. So like in many ways to me, the unlock to AI is UBI, universal basic income. It's like Andrew Yang, I think, was absolutely right about this. In fact, the reason why I ran him for mayor in 2021 in New York, we lost, but one of the main reasons that I was, put my support behind it is because I truly believe that he's right about this, which is you can't have a world with 32 trillionaires and 18% unemployment. Like that literally is not. That's the French Revolution coming our way, right? And by the way, deservedly so. So if you want to have an economy where people can prosper, people have to have income. And if it turns out that AI does in the short term displace lots and lots of jobs. So I do believe that in a 25-year span, we'll be able to look at it and say, oh, AI unlocked all these new industries that we can't conceive of today and all of these jobs, just like the internet did, just like the automobile did, just like the steam engine did and everything else. But there's going to be this 20, 25-year period probably with massive amounts of uncertainty and job loss while other entrepreneurs are figuring out some of this stuff, right? But as we know, like every startup that I invest in at sea, like I have no expectation of ever seeing liquidity for a decade, right? The 7-year, I don't know where the 7-year thing came from. Like that's not true.
It's all arbitrary.
Right. I mean, I've had a couple, like Lemonade was really fast. Like I've had a couple that were fast, but by and large, it's a decade is the norm. So if someone in 7 years creates something really exceptional, like the US economic output isn't going to really probably be impacted for 17 years, right? So what happens in that 17-year interim? People are going to really struggle. And if people are really struggling, it's because they don't have enough money. If they don't have enough money, they're not spending money, right? Like I can't invest in companies that are going to make a lot of money if no one's buying the product. At the end of the day, every single thing I invest in is predicated on the notion of selling someone a product or a service for more money than it costs us to produce said product or service. Otherwise, it's not a business. It's a hobby, like my bookstore, right? And so fundamentally, people have to have money to spend. And if businesses are so wildly efficient that their spend is radically less because they don't need it, and if consumers have so much less money because unemployment is 18% or wherever it is, and people are really struggling, they're not deploying capital. That's called a depression, right? And so to me, fundamentally, if you took AI and then combined it with how do we keep money in people's pockets, you could have this tremendous boom. I would argue that the bill that we just passed is literally the opposite of that.
That's interesting. It's also interesting bringing up the Intel investment. So that one happened. And then also MP Materials, which, by the way, like manufactures a lot of their magnets through China. So I don't really understand that one.
Well, I think it's because you're still assuming some level of policy and consistency. And I would argue it's just about individual gain in every case. So if working with China helps a particular company that now all of a sudden benefits certain people, makes them more money, they'll work with China.
Even the U.S. government?
Yeah. I mean, not generally no in this U.S. government. What should happen with the TikTok deal? Is that not a deal with China?
Fair. So what is your opinion on all these U.S. government deals?
I'm not a socialist. I don't support it. Mm-hmm. Like I believe in free enterprise, which means free markets, intellectual property, rule of law, investment in research development, investment in higher education, as much immigration as possible. That is how you unlock growth. And we're not doing that. This is just crony capitalism designed to benefit a handful of people at the expense of everyone else. And we are going to pay a massive price for that.
Scary.
Yeah, really fucking. By the way, I am in the process of getting Portuguese citizenship right now.
Really?
Less because I don't see myself living here, but as a Jew, we have never had a period in the world where we have lived in one country for hundreds of years safely. And I hope the U.S. is the exception to that, but I don't know that it is. And there's a lot to argue that anti-Semitism, especially on the left, is rising so significantly that I'm not sure that's really true. And I would like my kids to have another option, right? And it might be that the Portuguese passports just sit in a drawer or in a safe for 2 decades and we never touch them. Great. That's actually a really good outcome. But ultimately, what I don't want to happen is Kristallnacht, which was the night, kind of the beginning of the Holocaust, effectively, where all of a sudden it was like open season on Jews. Like, that's not the time that you start figuring it out, right? You figure it out now. Now, I am lucky enough that Portugal is still a country where effectively you can purchase citizenship. And that's what I'm doing, right? Because I have the ability to do that, luckily. But I would argue if you can do that, you should, because if you just take everything that I just said, if you disagree with everything I've said for the last hour or whatever it is, then sure, no need. But if you take the fundamental things I've talked about in terms of a zero-sum mentality, the underlying long-term damage to the U.S. economy and the capitalist system, and then arguably not even investing in the things that allow, if you take the beginning of our conversation, humanity in the race to outpace saving over destroying, all of that does not argue for the long-term future of this country. And I'd like to have another option.
Okay.
Wow, this became a really depressing podcast.
No, we'll amp it up.
All right.
It's not, you know.
Some music. Lance, what can you do to make this better? Like,
just play some rave music. I don't know. Okay, so maybe a positive question.
Yeah.
What is the biggest lesson you learned from working with Travis Kalanick?
A lot. And I understand that he took a beating in terms of his reputation at the end of Uber. I am an unapologetic Travis enthusiast. Did he make mistakes? Absolutely. But they were generally mistakes of omission, where he was so focused on growth and investment and things like that, that he really didn't pay enough attention to the underlying management of the company itself. And he paid a massive price for that. But I think he's one of the smartest, the two smartest people that I've ever worked with closely are Mike Bloomberg and Travis Kalanick, bar none. I remember one time, this was like before we even had like a New York office. So he was hanging out at my office, and we were in a conference room together, but I was on another call while he was working or whatever. So he only heard, while he was doing his own work, 50% of the conversation. And it was some potential campaign around like gas importation. It was really complicated, right? I barely knew what I was talking about. He only heard half of it. And when the call was over, just hearing my half then explained to me everything that I got right and wrong and where this thing needs to go and how their business should work. And he was fucking right. Like, the dude is a genius, number one. Two, he is relentless. And I think in some ways, his relentlessness actually has become a little bit of a mistake, in the sense that other people say, oh, I need a Travis Kalanick like founder with his relentlessness. His relentlessness is unquestionably a superpower. It works for him. There are other times where I've met founders who are almost trying to imitate him, and they're hyper aggressive without sort of the underlying substance being there behind it. And that's really bad. Like, that's actually worse than not being hyper aggressive. But when you combine his substance, his work ethic, and his relentlessness, it's sort of an exceptional combination. He saw the future, man. Like, the very first time I met him in person, I remember he said to me, one day, no one will own a car. They'll all drive themselves, and you'll get it by pressing a button. And he said that long before anyone else did, or well, at least long before anyone's like a futurist that just writes things but doesn't actually do anything. And did more to make that happen than probably anyone in the world, maybe him and Elon, you know? And so he saw it so much well before. And even politically, you know, and my first book, I called this Travis's Law, which was the notion of, we talked about, if you have a product that people are really passionate about, and you have the right means to mobilize them, you can turn your customers into political advocates and beat big, powerful, entrenched interests, right? Like, I might have deployed that really well, and I might have then taken that to lots of other startups I've invested in, but that was his insight, not mine, right? Mm-hmm. And that's, to me, one of the biggest political innovations we've seen in decades. So he is one of the most unique people that I know. I'm biased. I am in Cloud Kitchen, so I'm not objective. And I also just think that there's a humanity to Travis, because he's a shy, even awkward guy. He's not someone that's social. He has his friends, whatever, but he's not out there on like the social scene all that much. And so people don't really know him. So all they know are the stereotypes of him and what media does in general is they build you up and they tear you down. And then as I've been arguing to him, hey, we're due for the buildup again, although he's like, I'm good. I have a lot of disagreements about that. But so he got built up. Was he ever as absolutely heroic and superhuman as all those profiles in 2013, 2014, where you walk into an airport and there'd be like, 100 magazines displayed outward and his face is on the cover of every one of them? No, he's a human being. Was he in any way what he was made out to be when he left Uber? Not even in the slightest, right? He's a human being. But I think with that said, he is one of the most remarkable human beings I've ever met.
That was a really good answer.
By the way, I'm sure a lot of people who are, not Travis fans will hear this and be angry about it. I don't care. I've known the guy now for almost 15 years. I've worked with him for 15 years. I stand by every word of it.
Wow. Well, that answers my Brex question.
Okay.
No, that's great. I usually ask a Brex question on like founder performance, and I think that really that answers it all.
The problem is, and I have this problem too, he is not a good comp for anyone or anything else. I had the same thing in government, right? Where like if you only ever worked in government and politics for Mike Bloomberg, you're actually useless to everybody else because he was so different and so incredible and so unlike the norm that it almost ruins you for like any other normal performance or situation. And Travis in a lot of ways was like that too. So when I really try to not let my experience with Travis influence too much my thinking about other founders and companies because it's a terrible comp. Like for better and for worse, whatever it is, like you're not going to have another one of him or like I've made a lot of investments since Uber and some of them have been really successful. None of them are Uber and I'm never going to make as much money as I did on Uber and anything again. Like that's just one of one. Yeah.
Total one of one. That's insane. Okay. Well, Bradley, we are over time.
All right. Well, thank you for giving me all this time.
I could talk to you forever, honestly.
We'll just keep going after the podcast.
Let's get a live stream going.
Yeah, Lance will just keep recording forever. So.
Well, thank you so much for coming on.
Yeah, thanks for having me. I really appreciate it.
Hey, it's Molly. If you enjoy our interviews, check out our newsletter, Sourcery.vc, where we deliver a once-a-week top deals and tech headlines email, and also go deeper on our podcast interviews. Subscribe to Sourcery today. And don't forget to subscribe to the podcast on YouTube, Spotify, Apple, or wherever you listen. Link in description to sign up.